The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on this Friday the 18th of July. We've passed the halfway mark, and we're looking at the Dow right now, down 131 at 44,362, just stuck at that trend line resistance. Now I can take a little time. It's Technical Friday. So I want to go through this. This is the only hint that I had, because there is no dark news right now. There's nothing really out there that there are a combination of things that could very well turn into a market negative, but they haven't flashed as a signal in the market itself as something that is being repeated over and over again as being just bad for the market, right? So we get these one-day, these one-offs that sharp move down, and then there's buying, and the market closes near the high of the day or the high of the day. That's going to change at some point. We don't know when. I'm looking at different indicators, but let me just show you this since it's Technical Friday. Technical Friday meaning it's the day that I look at the charts and discuss them in terms of Chapman wave methodology. You know, I talk about internal highs and residual highs, internal lows and residual highs. What that means is like you get an earthquake and you then get the aftershock. Well, sometimes the aftershock is less, sometimes the same, and sometimes greater than the actual earthquake. In this particular instance, I used it as a market, just a salient feature in my analysis of the market. And what it does is I find a point where there is either a peak D or we're getting to a situation where I'm looking at the chart and I'm saying, technically, is it getting overbought? And then what happens is there's a pullback and then a retest, and I call it an internal high or a residual high. And that residual high can be higher or lower. It doesn't matter. It's this V-shaped pattern or cup-shaped pattern, and you got a failure pattern. It's the same thing at the bottom. But sometimes at the lows, you've got a lot of other things that can give you clues. You've got the VIX index. You've got just a chunk of things, right? And bottoms are often made simultaneously in the different indices or very close in unison. But tops are kind of spread. Sometimes it's spread by very little. Sometimes it could be like 2000. The January high was the all-time high at that point for the Dow, but the semiconductors and the S&P went to the March level to go to their highs, and that was it. So different things happen at different times on the tops, but at the bottom, sometimes it's in unison. Most of the time, it's in unison. Now, so let me just get this done because I've got a bunch of questions that I need to get to fairly soon because it's pertinent to the market as I see it. Look, you've got an internal high and a residual high, and thus far, you've gotten to the, look at this, you've got a little down. Oh, I'm getting to make this chart too crowded. I like it as simple as possible. Look, you got that triple top right there, declining lower highs, and you've got that potential right here, but it hasn't shown itself to be pertinent in that you haven't made lower low yet in the Dow. I'm thinking that the conditions that I look at and the rotation through the different sectors that I'm looking at is just suggesting to me that some areas are getting pretty darn overbought. Just on a purely technical basis. Maybe there's no real fundamental reason, but purely technically. So this says to me, if there's a break above, first of all, there's a break in the Dow above 44,660. I've got to take that into consideration that maybe this is going to be a very short-term internal high and residual high. And it could mean that if it takes out the 11th of February high in the Dow at 44,480, did I say 44,600? I did. Yeah. So if it takes that out, then the most recent recovery high, not the all-time high, which is at the 45,000 area. This is the high that I'm looking at right now at 44,885. That's the 3rd of July. So it's a work in progress, but right now it's saying, take this into consideration. The 9-period moving average is still very good, but it's got the M-shaped formation. So the right side says this is where you might start to see the 9-period moving average start to weaken. We haven't yet. I'm setting this up so that there's no surprise. We are long, and we are not doing anything yet about it. We've taken 2 short positions this week, over the last 5-6 sessions in the S&P, with very tiny losses and some gains. But we're out. But I'm looking at this and I'm saying, okay, so that's the Dow. The Dow's already made a kind of a triple top, 45,073 way back in, that was December, I believe. That was November the 29th. And then again at 45,054, I should type the dates in. That was the 31st of January. And then again 3 weeks ago on the week of the 4th of July. So it hasn't broken above it, so we can be stalling here for a little bit, and the monthly chart is still very good. Okay, now I'll take this. This will go much quicker. I want you to show you, look what happened. We had an all-time high in the daily chart of the S&P. Today it's gone to a higher high of 6315.61. I've got this as a leg G. There are other ways to counter to this particular point, but I'm quite satisfied. G, we can change the notation. This is just sequentially going alphabetically. There's never an H. If you pull back today, if you pull back today from the high, and then Monday, we don't break above 6315.61, but we do it the following session, I have to consider that's a different waveform altogether. Look at this spectacular leg C. All the way from the lows that were made in the 4,800 area. Here we are at 5303. All right, so there we are. A monthly chart is looking very, very strong. Now here we get to something very interesting. The QQQ making an all-time high, pulling back from that high today at 563.32, is now at 561.59. There I had an alternate count. And it turns out that was an instant restart, meaning within 3 bars after peak D made a new high. So you count E/, in your mind you think A, F in your mind you think B, and the G goes to a C. And lo and behold, if it goes above that, you've now got another buy mode that's going to the requisite leg D, and that's exactly where we are. This is where you can start to see some failure pattern, but we have a look at the fabulous leg B in the weekly chart. Let's go to the estimations. I actually want to get these out the way to tell you why I'm looking at this, and I'm saying there are hints that on a purely technical basis, so far without any dark news that really permeates through the market and just says, oh, we're going down. I don't see that yet. It made 293.20 as a high back on the 15th. And then today it went to 293.33. So this is now, we're calling it a leg E. All right, so that is the SMHs pulling back from the intraday high. So with that said, I'll a little later on, I'll see if I need to do this, but I'm going to show you right now why I'm talking about this as maybe some resistance levels are permeating the market. Look, there's the Dow, the Chapman Wave automated resistance. Look at those the black notation of the resistance. Let's go to the S&P as we go to the break. The Dow is down 145. S&P is now up to just 3. Look at all those. Look at this cluster of resistance levels in the daily. Look at the QQQ daily. QQQ, why did it not come up? QQQ, there it is. Look at the cluster of resistance. Look at the SMHs. Same thing. I'll be back in a moment.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Let me get to some of this real quickly because I had questions about it. So one of the first question was, should I take profits in ETH? This is Grayscale Ethereum in leg D at 34.419 up $1.97. And my answer is, I would absolutely take something off. I don't know about getting out of the whole thing because it's only a leg C in the weekly chart, but it's had big gaps all the way. And right now it looks to me the on-balance volume is the only thing that's saying this is a little toppy, very near term. The stochastic's flat at 96%. That's fabulous. The MACD is still expanding. The relative strength is strong. So I'm just going to say, take a little bit off as money management. I'm sure 3 days ago you weren't expecting from the 30 level that you'd be hitting 34 to 12% gain, just rich like that. So I'm going to recommend, yes, I would do that. Was that 32, 34? Yeah. So I don't feel uncomfortable at all saying that because it was really a big news event, and it seems to me that it's going to become a feature of the market for a little while. So you don't want to get out of it. There could be quite a sharp pullback. That's one thing. So the next question was, where was it? Was IWM a 2-click buy today? Today is the day. I tried yesterday, worked nicely. Today, I don't think so. I think there are a lot of cross currents. I'm going to go through them in a moment. So the IWM is down 25 cents at 223.66 at this particular point. At the low of the day, it has not taken out the 226.05 high that was made 7 sessions ago. I'm just saying, you're talking about an intraday. I don't think so. What you're really implying is on this pullback, is it worth getting in and thinking that it's going to close at the high of the day? I need to go through this very judiciously because I don't want to be just flippant about it, just looking at the chart and say, oh, yeah. No, I think that this is just saying to me, you've asked me about the IWM, that's the Russell 2000. But I'm just going to go, I want to see. General Electric is up 590 at 266.18. It's not at its all-time high, which was yesterday, 272.80. And yes, 272.80. And you remember, I said this whippiness that we're seeing today. If I see that in other stocks like Microsoft, Microsoft, just for clarification, we are long General Electric. Microsoft, which we're also long at the low of the day, down 49 cents at 511.16. It actually hit 514. Really, 514.64. So that's 514.64. Wow, that's amazing. And only a leg B in the monthly chart from, unbelievable, from April of this year, there's not been a single week where it hasn't made a new recovery high, and actually almost every week a new, that would be an all-time high and an all-time, well, the lows were higher. Unbelievable, all right? So I'm just thinking we're getting, what was that? Oh, Robin Hood. Whoa, 113.44 it hit today. Yesterday's high was 100, or the other day was 104. Here it is at 115. Remember what I was talking, I can't believe this. I was talking about this just recently. I was saying stocks at this is the back of my head. It's not the forefront of my head. It's just the back of my head. Says that if memory serves me well, for decades, I'm talking about decades and decades, I've always said, I've noticed that stocks that get to 96 quite quickly get to the 105 or 106 area. Then they make that the new home, and then all of a sudden they're in the triple digits for the first time. They might dip once or twice below 100, but actually 122 becomes the next thing. But it's usually over a period of time. This is done in one swoop to the upside. It's gone from the 95s to the 105s yesterday, and today it's hit 113.44. This is, well, it also has to do with the fact that I've put it together with the Robin Hood crowd is going together with the Bitcoin, which is down 11.55. I said that peak D at 123,615. Watch it closely, because if we go if we can hold 115,000, that's good. But if we break 112,500, it means you've got a couple of weeks of rest of period. And therefore, let me just go back to ETH, the question. Yes, as I said, now it's only up at $1.83, but definitely take something off. I don't know how much you've got. Do I say to you, take at least a third off? It's very tough when you've got, for instance, the all-time high. This is Grayscale Ethereum. The all-time high after its IPO just 6 months later, it went to 38.78. Today's high is 34.57. So it looks like 38 will become a magnet if it can get to the 3680s. So do you say, I don't know if I want to even get any. I want to maximize my upside. I say be judicious. Treat this market as gifting. You can double up, you can double up, you can double up, and that's great, or triple up, and you are going to be a multi-millionaire in no time. There is a corollary that says, if you are not judicious in the stock market, you want to live a long time in the market. For many of us technicians, there have been periods early on where we were experimenting with techniques, and it took a huge toll, and it took a while to get back. And therefore, my mantra is capital preservation. That's imperative that you have capital preservation. So don't overdo it. Just be. Tom O'Brien used to say, "There's always another trade." And I'm sit there. Sometimes I say to myself, Tom, you are so right. Always another trade. What was I rushing for? There's no rush. So with that said, I'm going to say to you, take a little bit, maybe even if you want a little bit more than a little bit, but feel comfortable. Don't feel saying, oh, no, I took more than I wanted. Now if it goes up, I haven't got it. Just do it in a thoughtful way. Okay, look, over 30, 40 cents, you can still think it through, right? Okay. With that said, so we did that Robin Hood. And is it Robin Hood pulling back? 111.80. Now it's only up 6.33. So so this is the story. Remember GE? We had that big wiggle woggle the other day, big intraday move. I want to see if we get that in Robinhood and Microsoft, and that's just going to be a hint to say, getting toppy, you can go higher, but that's the metric, that's the little barometer that I'd be looking at, the little guide that says, woo, be careful. All right? So we haven't quite got that yet, but I am looking at this and I'm saying, wow, so 130.44, and now it's starting to pull back. Now it's only up 5. Yeah, and that can change. Oh, well, it's moving quickly now. It's only up 6. Now it's only up 5. So let's go on. So a lot of questions came in. Basil, based on how hard it is to predict market pullbacks, do you try to time longer-term investments like IRA mutual funds? So that's a good question. I'm going to suggest this. In the longer-term time frame, look, this is only a leg B in Robinhood in the weekly chart. It should still go in Chapman methodology. It should still go to a leg C and the leg D. Dow's down 164, S&P's down 4. Starting to get some kind of very quiet, a stealth pullback when the buyers this morning thought this was going to be a good day. We'll be careful.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So let me just answer the question about the longer term. So my point was, and remember the other day we were looking at the IWM, and I said, you can just get your foot in the door right here. If it goes up, we'll see exactly where it stalls. But be prepared that the real buy, as far as I'm concerned, in the IWM in the intermediate term is where you want to really start thinking about putting on positions starting from a pullback. If it comes, it should come. But at this particular point, I was saying underneath the two, did I say 18? I think I said 218 to 212 is where I really want to look at it, because 211 is the 200 period exponential moving average. That should hold on any pullback, or at least it should become very strong support. So looking out, I said, if you're prepared to be, if you are willing to see even a 10 or 12% pullback, get your foot in the door right now, but you want a decent pullback to start looking at that leg D in the weekly chart as a potential, and then breaking, maybe even going to the 244.98 all-time high in IWM. So please look at it that way. I mentioned to my subscribers that in my market overview video that's coming up after the close today, I'll be looking at a bunch of stocks. I'll be looking at ARKK, ARK Innovation Fund, as we're speaking, all-time high. Oh, sorry. Oh, I didn't mean that. A recovery multi-year high, trading at 77.82. We had other positions that we put on because this was one I liked, but once it started to get away, we did other things. And then it's in a huge leg C in the weekly chart. You know, what do you do with these things? So let's just say it's going to have to be really bad news for that 9-period moving average to go negative and for it to turn pink. You'd have to probably see 66 to 62. You know, that's it could be a 13 or 15% pullback, but that's the difficulty. And in my video, I'm going to talk about what if we just don't get pullbacks until there's a pretty more serious one later in the year, and therefore you've missed out, like we missed out adding to our Robinhood in this big move up from the 96, as I said. 96s very often go to 106. Did I expect it would happen in days? But so what do you do? Well, what I'm going to be doing is, and as I said before, why not just get your foot in the door, and then you get a sense of what's happening, because if it rallies and then it pulls back and it's holding well, and the market is still not, there's still no bad news out there. Remember, for me, you're only going to get a weekly significant pullback when there's bad news that filters into the market and doesn't go away in a day. It's there and it stays and it sticks until you make some kind of a low. So that was a W was the other one. Pulling back here, Wayfair Furniture had a great move. So now, next question came in. So I'm saying start your positions, but not fully. Just get your foot in the door, because you want to be there if it actually starts to move up, because then you can add to it. I am anticipating that there will be some kind of a pullback, but this has been just so resilient a market that just to start your position is better than just watching it going up and up and up. And you put in a stop that you're very comfortable with, tight stop or a little bit wider, but it's not a big position. It's a position that if you've lost that stop, you get stopped out. It's just not a big deal. It's emotionally a little upsetting, but it's not a big deal in your portfolio. Okay, I hope that helps you. I'll talk about it again in my video for subscribers this afternoon. I don't know if it'll be an hour and a half, but it'll be at least an hour, because there's so much to discuss. So MP is really important. MP, mentioned by a couple, one in particular, Fletcher mentioned this in the den, ages and ages ago. It's MP Materials Corporation. Once hit 60.19 back in March of 2022, and then cascades down to about 10, and now it's trading at 59.83, down 39 cents. Well, if you're looking at this and you say, wait a minute, two big gaps, what are we going to do? So the question is, and I'll just phrase the question exactly. Basil, please take a look at MP. I'm in at about 32, and remember it's trading at 59 right now, and wondering if it might not be a long-term hold core position. So let me do this. Look at the monthly chart. That break to the upside in leg C answers Frank chart-wise by saying absolutely. That is a buy mode in leg C. It should still go in the Chapman methodology. It should still go to at least a D. Now, does the D come after ST goes from 60, it goes up to 78, and then it pulls back to 70, and then it goes to 90. And if you don't get in now, you've just lost it completely. Well, the question is this a long-term hold? And I would say on a monthly basis, yes. But does that mean that you can't pull back? Look at the spectacular candle, one of the best candles, 30 to 60 doubles. I mean, you saw that in, what was that stock that we were looking at yesterday? Did I write it down? Oh, don't tell me I did. XRPT. I didn't write it down, but I believe this is XRPT. Yeah, look at that. So that is spectacular, going from 12 or something up to, well, up to 20, up to the 27s. That's different. Okay, so back to MP. But wait a minute, I'm just looking at the stock. What does this do? MP Materials Corporation, Rare Earth Minerals. MP is the symbol, up 30 cents right now, up 3 cents, up 11 cents. Ooh, something's going on at 60.36. So it's in the area that's needed, rare earth minerals. I think I read somewhere that it's one of the major companies, or maybe one of the only companies, but it's very important and it's being recognized right now. So that says on a very short-term basis, it could be overbought. But does that mean that you don't have it for a longer term? No. This is one that I think at least a chunk of your portfolio, that the chunk of the position that you have should be part of your portfolio. I would then say I'm taking a little bit off, maybe here at 60.53, but this is different to the one we were looking at earlier. This is where you want to keep your core and have a trading position. We've done this very often with our positions. And that trading position says, if you take a little bit off here at 60.67, the low of yesterday was 54.80. If it takes that out, it could start to fill the gap right here of 52.89. So this would be a little trading position. And that's the only thing I would say. Preferably just keep it and do other things. Don't even look at this. But on a shorter term basis, if you think, all right, I've got it as a core position, what else do I do? Then what else is take a little bit off. I wouldn't add new money to the trading position just yet. I would say take a little bit off at 60.54 and just have patience. I'd like to say at some point it'll definitely be down at 51. That's 10% lower. I don't think I can say that. Not with the rare earth minerals, but I would like to see it pull back, and then you get that. That's your trading position. You've got your call, forget about it. You've got your trading position. You can go in and out. You don't ever have to short. You just buy, and then when it gets a little tougher, you sell and you keep buying, and that's another way to do it. I'll be back. We're looking at MP Materials. A bunch of questions have come in again. I'll deal with that when we return. Dow is down 157. S&P is now down 2. And what is Robinhood? Robinhood is now up only 5.78. Woo.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
The question about UAVS, which is Ag Eagle Aerial Systems, trading at $1.79, up 0.33. It did a peak A, big C, and today it got that D. Big spike up. Wow, it was fabulous action between 120 and today's high gets a double at 237. So it's pulled back some. Yeah, the way this is looking, it goes to a D, and then you got to be careful because it could pull back. I can't talk about the weekly and the monthly. It's almost impossible even to see them. Yeah, so just be careful because if this closes under 160, UAVS is a symbol. Under 160, it's back to the sideways trading band, but it did exactly what you were looking for. The little gem, you're right, flying high, done very nicely. The weekly, I'll have to do the weekly chart is very hard for me to do anything with right now. But anyway, that's what I'm saying. If in the next 3 days it hasn't gone to 248, that means it's going to go sideways. Next question was, where did it go? I did Carvana. CVNA. Carvana is trading down 568 to 340.42. So this is one that I had notation. It got to a peak, E pulls back sharply, and then it goes to a higher high. And I wasn't sure what I should call it because the 9-period moving average was very strong, but I called it an alternate count, F/B, then it's got under it a gray slash, an A and a B, but it's a peak C in the weekly chart. Fabulous action. I've got this as 344.32 was the all-time high in July of 2021. That was a couple of years ago, 4 years ago, and now it's getting close. I believe that will be the target, but on a very short-term basis, if it takes out 336.50, on a closing basis, it's going sideways for a little bit, and that's really what I'm looking at. But as a longer-term holding, I think it's pretty good. Next question came in. Key, K-E-Y. Oh, I wonder if I've still got this notated. Yes, good. Key is key call. Here we go. Key call made a peak C, and then I stopped counting it. It went to the D. It's pulled back very mildly. And it's a leg B, maybe probably a peak B today in the weekly chart. So what is the question? When you look at Key Bank, for me, I have August calls up a little earnings on Tuesday. August, let me just quickly look. August, that'll be August so we start on Friday the 1st. Oh, so that's 1, 2, 3. That goes to the 15th. Oh, that's still at least a month. No, I think that's fine. August, did you tell me what calls? August something calls. You didn't say, and I'm not sure whether you got maybe August 18 or 19 or 20. But all I can say is, from the chart pattern I'm looking at, I think that's going to be good. It could digest a little bit here, but what I'm going to say to you is if it pops just once to above the peak D, which is at 1873 in the next week, if it goes once to, I'd say, 1883, and then comes back in the next couple of days under 18. It might take a week or so of digesting the gains, but I think for your August call, wherever it is, I think it's good because my eye, basing it on my eye, says that there's a real good chance that the 20 target will be reached. And there are 3 moves that were very significant at 4 actually, back in August of 2022, November of 2022, 20.04, and a little higher at 20.30 in February of 2023, and then it tanks and goes down to the 8s or something like that, goes to peak D, where stops dead at 20.04. So that would be a target as I'm looking at it for now. I hope that helps you. Most importantly, if it takes out the low that was made 3 sessions ago of 1764, just be prepared that it has made that peak D in the daily, so it could pull back, and the weekly chart is still very strong. I don't think it's going to go much lower than 17.5 at this point. We'll see. So I hope that helps you. Next question came in, and that is, let me go. Okay, got that, did that. Looked at MP, we did. CVNA, did that. CTAS. I can't remember what the question was. CTAS, remember, I look at this all the time, Cintas Corporation, Uniform Rentals. I said, I'm getting a little cautious because it's pulled back so much. It's kind of a market statement. So from the high of early June, that was June the 6th, it goes to 229.24, just above the 228.12 November 24 high before it tanked to the 180 level. Then it comes all the way back. I love the way it comes back, and within a point and a half of a $200-something stock, it makes a peak D and pulls back. But look at the last 2 sessions. It must have had good earnings. So the earnings, I'm guessing that it must have had good earnings, because yesterday the low was thank you very much, GT, for mentioning that, 209.50, closes the day at 222.34. Those 222 numbers are very important because the IWM keeps trading around the 222 level. 224.71 today. So that to me is another reason why I'm saying to you that I don't know what is going to be the dark news that really tanks the market. Because we looked at this and we looked at Uri, and I said, Uri is coming back very nicely, going to an all-time high. Well, it hasn't yet gone to the 896 all-time high, but it did go all the way to 824. That's 70, it's more than 10% away. But look at that. At least it's near the intraday. At least it's near the yearly highs right now, even though it's down 6.56 at 810.25. So all I'm saying is that the evidence that I need is to get some kind of a shakeup. Let's go to the estimations and see if they are now down. Yep, they're down $1.28, 290.42. NVIDIA is in a leg E. This could be an instant restart, but I doubt it. A leg E, and that just suggests that 170. Another thing we haven't been seeing are any round numbers, and that just says to me, well, people are not panicking about buying or even selling. So without the round numbers, I'm losing one of my clues. Remember April of last year, we had all those unbelievable number of round numbers, and that just gave a clue that we're going to drop sharply, which we did. I don't see that quite yet. So the signs are there that technically, just purely on a chart basis, we're getting a little toppy. But look at the stochastic of NVIDIA, flat at 92. When that finally gets to the 75 area, the stochastic, slow stochastic, now you're looking at a chance that NVIDIA could start to pull back. But it's way above the 9-period moving average of 157. 157 is above the 14-period moving average of 164. So to get this negative, you're looking at 153, somewhere in the 153s. Okay, so did that. Now, before we go to the end of this particular thing, I did not do the GDX. The GDX is down, it's up 14 ticks at 51.34. It's got the dreaded H. It's trying to resolve this by trying to break above to make an M-shaped pattern. But let me tell you, if if the GDX, remember I was talking to Tim Ord yesterday, who was interviewing him when Tommy couldn't make it, and he said he's got a target lower down, but so far it's really held fabulously, and even the weekly chart looks pretty decent. The silver chart is trading at up 31 cents. Yeah, also looking quite good. I'll be back in a moment. Dow's down 175. S&P is unchanged. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
I've always all very well talking about stocks that you're in, stocks that we missed, like we always have UEC, which is Uranium Energy Corporation. This time didn't get in. Look at how it held that 200 period moving average so beautifully, and now it's just had a big spike to a leg D, down 2 cents at 8.13. Just in a week. This week it's gone from the 650 area all the way to 8.33. Which is what we wanted, but I decided for a pullback. Didn't give the pullback, and now it's up huge, up from the 840s. The 640s all the way to 917. Today's high is 952. And look at this breakout Chapman wave, beautiful Chapman wave cup and ladle pattern. This is the example that I used, and we aren't even in it. I missed it. Energy Fuels Inc. Doing great. You remember Jacob used to talk about this all the time. So with that said, what am I looking for? I'm looking for signs that there's certain areas that are starting to weaken. I'm getting a little tidbits there, but nothing really potent. But the most important aspect that I'm looking is, for instance, AIQ has been holding very well. It hasn't broken to new highs. It's actually struggling until yesterday and today. Today actually broke to a new high. It went to, this is the Global X Artificial Intelligence ETF, real long, and it's now gone to finally that leg D that we were looking for in the weekly chart. So now it's just telling me, maybe we started to be a little careful. BBAI, which we had great position in, and it pulled back, and I thought you should get in, and we didn't. And today I said, let's get in on a pullback, but with a fair, just a reasonable stop, but we got stopped out of this trading position. So we'll have to see what happens before. It should have gone towards the 872 level. Instead, it went to 848, and now it's pulling back. So I think it's becoming a lot more selective right now, but we're also starting to broaden at the same time in areas that didn't work. And I spoke to, I'll go through some of them today with subscribers to my opening call in my video this afternoon for subscribers. So check out my opening call daily newsletter and have a great weekend. And I will see you on Monday. Basil Chapman signing off. We'll do the news.